What is going on, guys? What is going on, guys? What is going on? What's going on? Good to see you guys. Been a while since I've been live, it feels like. What is going on? Good day. Sonar, Cooks. What's going on, guys? Let's take a look at I'm going to share my screen in a second, but let me just announce this real quick. Real quick. Messages. All right. Good to see everybody. What's going on? Let me share the screen. Obviously, you guys are here for one reason and one reason only. Not for me, but for FOMC. Aisha, what's going on? Oscar, Rick, Silent, Gainer, Alba, Tony Hale, Oscar. I never know if your name is Oscar or Op Caesar or Opscar. So tell me how to pronounce your name. John Lewis, Heather, Jesse Cruz, Hatwolf, Joe, what's going on, man? Lee Bailey, Joe, looking forward to that risky room, that new room that I want to create called Risky Room, invite only on the Discord. It's already been a crazy morning on the Discord. We had an epic NQ short that was closed for $930 per contract. I personally took a SPY call spread in the morning. I shared a chart on Twitter, but I took a SPY call spread when we hit the top of the daily fair value gap, right? Or sorry, hit the middle of the daily fair value gap on ES right here. I took a SPY call spread. That call spread is currently up 50%. I closed most of them. So already had a couple of good trades pre-FOMC. What did you say? Show your bluesy? Your bluey? You talking about this? It's sitting right here on the desk. I call it the Cookie Monster. But yeah, I mean, it's so far a good FOMC. So my thesis for FOMC, if you caught my morning analysis, what I was saying was I expected a bullish day to start the day because we were entering into this imbalance here, right? Can you guys see my screen, by the way? I hope you can. But we were entering into this imbalance. So my thesis for the day was bullish, meaning that we would start filling this imbalance and then start retracing off of it. Obviously, FOMC, we have the decision in 10 minutes. And by the way, I have a surprise for you guys. For those of you that aren't in the academy and you want to get my daily analysis, you want to get all of our trade alerts, not just mine, but 2 other analysts as well, there is a code for 50% off for life in the description. Make sure you take advantage of that because that will go away before the end of the week. So make sure you take advantage of that. But yeah, so we have the Fed decision in 10 minutes. And so far, my assessment, as well as other people's assessment, I'm going to show you something historically that was crazy. 99.2% that we actually stay put. 99.2% that we stay put, that we don't see a rate hike. Right? Hit that thumbs up if you're on this stream. There's like 600-700 of you. Hit that thumbs up so that other people find this stream. And by the way, this might be the first day I stream back from being overseas. When I was overseas, I tried to stream twice and was having issues. So thankfully the connection is nice and solid here. Knock on wood. 99.2% likely that the Fed doesn't do a rate hike. Now, I want to share something with you that most of you are too young to remember. In 2001, there was a surprise rate cut, okay? There was a surprise rate cut that Alan Greenspan did, and he actually did it before the FOMC meeting. So people think that you can only do rate hikes or cuts during FOMC. You could do it whenever. The Fed has the power to do it whenever they want. they actually cut rates by 25 basis points. So they went from 6% to 5.75%. And they did it before FOMC. And they were citing that they were scared of an economic slowdown, right? NASDAQ, I think, had the biggest single day rise of all time, percentage-wise. The NASDAQ saw a 26% gain within minutes. Can you imagine the NASDAQ rising 26% in a few minutes? Then the following days, the NASDAQ ended up losing all of its gains because, you know, that's not bullish if the Fed is afraid of an economic slowdown. But I just want to give you context that surprises can happen. So don't always, you know, take things for granted. Do not leave big positions wide open. A lot of people lost billions of dollars that day in 2001. Billions of dollars, right? So if you are in a short, like we were this morning, shout out to Justin, one of our analysts. If you were in a short like we were this morning, you don't want to hold that big position during FOMC. Literally anything can happen, right? Now, we are going to be trading FOMC actively as well, as we always do. It's not common that you get such a clean move before FOMC. Today, the market gods decided to bless us with a clean move before FOMC. But in 7 minutes, I think you're going to start seeing what we call, what do we call that? What is it called in ICT terms? Seek and destroy, I think, right? So where stops on both ends can get raked. And I know that most people, and unfortunately most newbies, don't trade futures, and they're trading options. And most of those options will likely get killed on both ends. Because when you see, you know, say you're trading SPX options today, and you're like, I'm going to go short and buy puts, and someone else is going to go long and buy calls. You know, this type of quick moves, you know, these types of quick moves where, where's my thingy? You know, where you get these types of quick moves like this, they're going to kill options premiums, right? And unless you're a ninja and you mark it out at the right time, it's very hard to play. Now, most people are going to buy options and they're just going to hold, right? And they're going to hold through these large drawdowns. Whether you're in calls or puts, I guarantee you will see large drawdowns, right? To me, that's just gambling. More power to you if you want to play it that way. But the real time to actually take a trade is at 2:30 after Powell starts speaking, right? So we're going to get the rate hike decision in 6 minutes. It's going to be in written form. We're going to digest that. You'll see some volatility in the market. Powell's going to start talking. You'll see a little less volatility, but you'll probably still see big moves. And then once the meat of what he's saying is out of the window, that is when you'll get the true move, right? But most people are going to buy calls and puts now when IV is super high. They're overpaying for calls and puts. You can even see it here hitting the tape if you use something like Cheddar Flow or Unusual Whales, or even in your own platforms, right? You'll see just thousands and thousands of calls and puts hitting the tape. So, you know, if you're trading options, good luck, more power to you. But yeah, tomorrow, Indian market gap up or not, bro, all respect to you and the Indian market. How would I know, bro? I don't trade the Indian market. I couldn't even tell you one company outside of Tata that isn't, maybe Infosys. I know that one because I used to do work with them when I was in Silicon Valley. All right, so Infosys and Tata. There you go. Those are the only two Indian companies. I know, bro. I couldn't tell you, dude. Like, I wish I can keep track. Like, and it's no shot. It's no shot at Indians. Even the Canadian market, which is right next door to me, I couldn't tell you. You know what I mean? So I don't know, bro. Thumbs up, everyone. Let's get 1,000 likes. Man, if we get 1,000 likes, I'll give away 2 of these hats. Or if you guys want a hoodie, I don't do a good job of marketing this. This is a fly ass hoodie. This is a Champion Traveling Trader hoodie, and I've never marketed it once, and I don't know why. I will send someone a hoodie and I'll send someone a hat at random if we get to 1,000 likes while the stream is live. Okay? I promise you, I'll do that. 1,000 likes and he's sending me a thought. No, bro, I'm not sending you a thought. I'm sending you a hat. Bro, I need that hoodie for my morning runs. I got you, man. I got you. Get it to 1,000 likes. I love that hoodie. I have one in gray. Shout out to Dina Del Sol for being a loyal watcher, and she's also in the academy as well. Hat would be sick. All right, get it to 1,000. I promise you. I'll pick one person at random, and I'll send you a 2.6K likes. No, it doesn't. It says 335 likes. How about a Taco Bell shirt? Lynn, I actually got that shirt at Target, okay? I've never told anybody this. Do you understand how many times I've worn that shirt and how many times people are like, where did you get that? And they go to Taco Bell and ask them for that shirt. I actually got that shirt at Target, okay? That's a secret that I've never told anybody. All right. Anonymous, thank you so much for the $50 donation to St. Jude's. Oh my God, appreciate you. Thank you so much. Thank you so much. That's amazing. And yes, this is a St. Jude fundraiser, as always. You know, we will switch it up during times of need and do fundraise, like we did one for the Maui wildfires. So yeah, make sure that you hit that donate button. Don't send me any super chats or whatever they're called. Appreciate you donating $20. Another anonymous donation. Appreciate you guys. I have 300 contracts and SPX puts. I mean, I'm praying for you, but that's just a gamble. That has nothing to do with trading, bro. That has nothing to do with trading. All right. Are you in the Middle East? No, I'm in my home. I'm in California. Levi Vargas donated $20. Man, you guys are on one today. Appreciate you guys. Thank you so much. Can you please consider doing podcasts? Podcast is great for your fan base to know you more and how you are actually thinking. I do podcasts. I've done a lot of podcasts, actually. I don't have my own podcast, but I've done Ryan Pineda's podcast. I've done Trading Nuts podcast. I've done Market Moves podcast. And I was recently on Riz, Words of Wisdom podcast. That's not out yet, though. But I was on Words of Wisdom podcast. Shout out to Riz, man. That guy's our Joe Rogan. I love that guy. How do you like Cali? I love Cali, bro. It's my home. Wisdom, yes. Op, yes. Words of Wisdom. All right, let's see what's up. I'm gonna shut up and let this play. Keep the comments coming. 1,000 likes, sending a hoodie and a hat.
Bond yields are higher.
Yes.
He's quite content with that.
He likes the fact the market's not fighting him anymore.
No change. Widely thought that, the door might be left open.
Here we
Let's
go
go to Steve.
Unchanged. Federal Reserve leaving the interest rate unchanged at 5.25% to 5.5%. It's the second meeting in a row. The Fed has been on hold. First time it's done so since early 2022. The Fed, however, is still, quote, determining the extent of additional policy firming, suggesting that there is still a hiking bias in the statement and among the committee members. The committee saying it remains highly attentive to the inflation risk, language precisely from the prior statement, as well as saying that inflation remains elevated. The economy was upgraded just a bit, saying it's now it grew at a strong pace in the third quarter compared to a solid pace in the previous statement. Job gains were also upgraded just a bit, saying they moderated instead of slowed in the prior statement. The statement also now mentions tighter financial and credit conditions, adding the word financial likely will weigh on the economy. That perhaps is a mention for the rise in the 10-year yield and other yields that have affected the economy. The decision was unanimous, and now we have a question. By the way, very, very similar statement, only a few words tweaked. Does the upgrade to the economy now perhaps put additional rate hikes on the table, or is the idea that this statement is so similar to the other one that led the Fed to pause, does it lead you again to think, well, you know what? they're teeing up another pause here. I guess we may have to wait for the press conference to find out.
Fascinating.
Yeah.
There's some of the market reaction. Steve, stick around as we bring our panel back in. And Bob Pisani and Rick Santelli also join us. Rick, I'll start with you as it looks like we're seeing yields move lower.
Yes, we're moving lower, whether it's 2-year, whether it's 10-year. From 3-year all the way out to 30, we have double-digit drops in yield. But the real key is, why are yields dropping? Now, as we look towards today, obviously at 8:30 Eastern, we had a whopping $2 trillion less in the refunding package of 3s, 10s, and 30s, and I truly doubt whether that $2 billion less is going to make that much difference. But there was a psychological issue there, and I do think that we have brought in many buyers over the last couple of days with respect to treasuries. They had a failure to launch in 10-year with a close above 5%. And now it's a neon sign. Many are moving towards the long end and looking at what they consider juicy yields. But I think that the Fed has a real problem here. I continue to go back to the notion that we spent $5 trillion during and post-COVID. That money isn't all spent, and it's going to continue to potentially give us a sugar buzz, which makes the Fed's job that much more complicated, because we all know sugar buzz growth doesn't lead necessarily to organic growth, which is sustainable. And I'll leave with one final thought, that we now have $307 trillion of global debt. Okay, that's per the Institute of International Finance. CNBC did a great write-up about that. That's as of mid-2023. To me, that's an issue. We can have global slowing. Put the U.S. aside. Just look at Germany. Just look at all the global metrics. We are definitely slowing. And with regard to inflation, hey, let's say that it's peaked. But one area that's going to remain sticky is going to be electricity and energy, whether you're in Europe, whether you're in Germany, or whether in the U.S. That transition is always out there. So we're going to have some inflation, lots of energy inflation. We're not going to have disinflation, as Tyler always brings up, bringing us prices back to where they were. And $307 trillion of global debt. To me, it's going to be an issue that continues to keep interest rates mostly higher, even though right now it seems to me that if we close under 4 3/4 and 10s anytime this week, I think we can go down another 30 or 40 basis points. But in the grand scheme of things, I'm still looking for much higher rates.
All right, let's go to Bob Pisani and see how equities are reacting to this decision by the Fed. Bob.
Modest move up in the S&P, 4 or 5 points here. Not much of a change in the statement. It says job gains have moderated. It said job gains have slowed in the prior meeting comments. I see here Fed still determining the extent of additional policy firming. So a modest hawkish bias. I think the problem for the market now is it's basically positioned in a dovish way. It's assuming that rate hikes are essentially done, and the Fed's going to start cutting in the middle of next year. So the pain trade that would cause the most difficulty for the most participants is that all of that is wrong, that we are not going to get close enough to the Fed's 2% target goal for them to be enabled to essentially stop raising rates and to start cutting in the middle of next year. And that's sort of the problem the market's got right now. It's potentially wrong here. We did have some good news today on the ISM manufacturing, supportive of generally somewhat weaker economies. So you've got to have that, the ability to show that the economy is slowing down here. So I think Powell's probably going to continue to reiterate the economy is resilient. Pricing pressure is still very prevalent, and they're prepared to raise if the evidence does not indicate they are getting closer to their 2% target. That's the risk right now, and I can't help but think he's got to maintain that position, that a rate hike is still very much on the table. Guys?
Jim, you have been the one who probably among this group feels that the Fed may be more aggressive. Is there any? Do you agree with what Bob just said, that another rate hike is very much on the table, and maybe this decision and this statement makes it even more so?
I think Bob's correct. I'm in his camp here. Look, I mean, the risk in the market is that the Fed continues to hike interest rates. I mean, is it likely that they keep rates higher for longer? Yes. And yes, bond yields are higher. Yes, the economy is cooling. But that kind of misses the point. Is inflation falling fast enough, and are they getting to target fast enough? And the question is that it might not be. So all I'm saying is that when we look at probabilities for the Fed funds, rate to move in December, it's, maybe in the low 20% probability that it happens. What I'm saying is that it should be closer to 50%. And I think that the Fed would be happier making the market think that. Now, that wouldn't be good news for equities. That wouldn't be good news for the bond market. But that's part of the solution for the Fed. So, yes, financial conditions have gotten tighter, and the Fed stated that. But as Steve Leisman said, there has been an upgrade to the economy. Things are kind of going the wrong way a little bit for the Fed. I mean, over time, I think that they might be right. But are they willing to risk inflation reaccelerating, becoming unanchored, and then having to come in more aggressively later?
Joseph says CNBC at the Waffle House. All right, if you guys don't know what he's referring to, it's because there was this sound in the background of it sounded like someone dropped a spoon or something, and I guess you guys assumed that it was me. That was from the CNBC feed. Someone looks like that they had dropped their coffee tumbler or something. And so Joseph says CNBC at the Waffle House. Oh my God. Morning from Fairbanks, Alaska. Lewis, what's going on? All right, so you guys heard it from the horse's mouth. Fed rate unchanged. Like I said, if you look at the 1 minute, this is going to take out stops on both ends. This is seek and destroy. Took out stops on both ends. So, if you guys had calls, if you had longs or shorts during this, either you held and your heart was literally at your genitals, or your stop limit hit or whatever. But this is not a time to trade. The real move is after, when Powell starts talking. This always happens. Always, 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 always happens. Okay? This for me is not a trade. We had the cleanest moves almost, maybe for the whole week before FOMC. Trading before FOMC, awesome. Trading right when the rate hike decision is released sucks. Okay? This absolutely sucks. So I'm not holding a position here. I do have runners on that call credit spread, but they're just runners. I took most position off at 60%, and I'm happy with that. And also, it's, they're so far out of the money. It's the 424 SPY credit spread, right? So it's this. Let me take a screenshot for you right now, and I'll show you what I'm talking about. It's this right here, 423, 424, right? And SPY is currently at 420. So if it even expires a penny below 423, I get 100%, right? So I'm okay with that. But buying naked calls and puts, not my type of play right now. Okay, wait until Powell speaks. How many likes did we get on this? What? We're not even at 500. How are we supposed to get to 1,000? Guys, 1,000 likes. And I'm going to pick one person at random and give them not even this hat. It's going to be a brand new hat. And not even this. It's going to be a brand new hoodie, right? We are awaiting Fed's Fed Chairman Powell is going to start talking in 20 minutes. We're going to wait for that. Would you consider offering a trading course for individuals with no prior knowledge of trading? I'm aware of your mastermind courses. Yeah. I mean, we do have an options course and a day trading course. Yes, Miguel. There was a Halloween special on the courses if you just wanted the courses, and it also gave you a free month in the Discord. So not only do you get the courses at a huge discount, I think it's less than $200 for all of the courses, but you also get a free month in the Discord. It is let me see if it's still on, because it was for Halloween and it was on an email somewhere. I don't know if you got it. Let me see if I can find it for you. Okay, I'm gonna put it here. That right there, okay? That's the Halloween thing. It should still be on. You're in the Discord? Well, then click that and you'll get just the courses. Obviously, I know that the mastermind is a big commitment. To me, it's worth it. And those people who are on in the mastermind that are on the call will tell you. You don't need to hear it from me. You can hear it from them. We just had an option selling option selling session yesterday, right? Which is very intense, but I think one of the most valuable things you'll ever learn is option selling. Okay, here's what I'm looking at, right? I'm looking for when this yield curve uninverts, right? I don't know if you could see this because of my head, but let me see if I move this way. This way? Yeah. Right there. So I'm waiting for that yield curve to uninvert. This is the 10-year, 2-year. When that uninverts, then we are close to a recession. I'm also waiting for, I do think that the 10-year is going to have a resurgence. The 10-year is actually, in my view, where's the 10-year? The 10-year right now hit this trend line. I might buy ZN futures, betting that the 10-year yield is going to go up. Sorry, short ZN futures, betting that the 10-year yield is going to go up. I do think the 10-year yield goes up, back up to 5%. This is far, far, far from over. And by this, I mean this wrestling with inflation, wrestling with yields. This is far from over, right? The Fed did skip today, but it's going to take a very long time to actually get inflation down to 2%. And it's going to take a very long time between a pause and between something breaking, right? Here's what I wrote on my Twitter account. Follow me on Twitter, by the way, for free market and trading updates every single day. I even sent out that note on the SPY, what I was looking at before I took that credit call spread. So make sure you follow me on there. But my Tesla analysis is here as well. But I was going to show you this, okay? This is what I posted the other day. After fastest pace of rate hikes ever, I believe the Fed is done. No hike on November 1st. June 2006 was the last rate hike before the Great Financial Crisis. So the Great Financial Crisis in 2008, it was over a year and a half between the last rate hike, as you see here, over a year and a half between the last rate hike and between the start of the recession. So what I think is going to happen is something like this. I think that this is the final rate hike. I don't think we'll get any more. It's going to trail off in the same way that, we flattened out here, in the same way that we flattened out here. And it'll be 2024 before we get a recession. So I believe the Fed is actually done. Rates now are higher than they were in 2006, which is crazy, especially for, being in a zero interest rate environment for, 2008 to 2020, for 12 years. We were in a zero interest rate environment. So to rally like this, to see rate hikes like this is insane. I believe the Fed is done. This is going to flatten out. And as it flattens out, things are going to start breaking. This is what higher for longer means, right? Fed pause means should pop off. What should pop off? What should pop off, Andy? The Fed pause was priced in. But do I believe that the market will rally? Yeah, I do think November and December the market will rally for sure. For sure. I'm not 100% sold on that until we clear this. If we end up clearing this major imbalance here, this fair value gap that I shorted the top of this morning, still up 60% on this short, by the way. This is the real way to play options, right? Not betting during the meeting, but setting a cushion for yourself ahead, early in the day. But if we invalidate, if we pop above this, right? If we pop above this in the coming days, then I think we've seen the bottom on October 27th for the rest of the year. And I do think we'll hit a recession next year. If we reject off of this, then it's going to be more pain and it's going to be very hard to justify a Santa rally. Do you think TLT has bottomed? I love the questions I get on TLT when I don't think most people understand what TLT is, right? I think there's a lot of online chatter about TLT because it is bond related, and then they see where TLT was during the height of the pandemic. You know, it was trading at almost 180, and now it's 84, and people are hoping that, you know, they could buy this and make the same amount of money. They're hoping that they buy this and that TLT just magically trades to 180. Do you know that TLT trading at 180 is a direct measure of the Fed cutting rates to zero? So do you think the Fed is going to cut rates to zero? If not, you have no future in TLT, right? SPY to drop. James, the move has already been made. So if you're not in a position, I think you have to wait until Powell talks. Let's trade some futures while we're waiting. Keith, I would caution you against that until Powell starts talking. How many percent of the signals in the Discord are for futures? Quite a bit. Quite a bit are for futures. But you can obviously mimic the same shit with options, right? Like if I'm trading NQ futures, if you were an options trader, you can trade QQQ options. Here's our trade recap for October. 22 winners, 4 losers, 6 break even. Quite a few of them are futures, but obviously you don't have to trade futures. I would advise you, not advise, but I would encourage you to trade futures. He's not going to raise rates. We already know y'all late. Dude, we covered that already. You're the one who's late. What do you mean? We already covered that. Recession can't be priced in. You can print away a recession. Recession is somewhat priced in, Mr. Fresh. Yes. What's not priced in is the extent of the recession. But yes, of course, a recession is priced in. It's that you don't know what the extent of the recession is. So if it's worse than expected, or the conditions leading to the recession are the underlying conditions are a black swan, then yeah, of course you're going to see a drop. But recessions have been priced in the past, and this recession is very telegraphed. Anyway, speaking of TLT, I'm saying that you know that bond prices and bond yields move inverse, right? And TLT is a 20-year ETF. It's a 20-year bond ETF. It's not a 2-year bond ETF or 2-year treasury ETF. So people they look at TLT and what it was and where it's at now, and they think they're somehow going to buy this and be rich. But they don't even understand how bonds work. They don't understand the different durations in bonds. They don't understand that in order for us to uninvert this, the long end of the curve, right, which means long-term yields, 10-year yields, 20-year yields, 30-year yields have to go up. If those yields go up, TLT is going to continue crashing. Okay? So TLT is not a Fed trade. TLT is a long-term bond trade. And in order for this to uninvert and get back to normal, where long-term yields are paying more than short-term yields, long-term yields have a lot more to go, which means when long-term yields go up, TLT is going to go down. Does that make sense? 2:30 p.m., 10 minutes until Powell. Scary deal covers you for life? No, dude, it's nowhere near life. You're going to get the courses for life, but you'll get 1 month in the Discord. If you want the lifetime, that's obviously something that's going to come at a premium. But you get the courses for life, and you get the Discord. It's all explained there, dude. It's not that, you know, it's written very clear. Still unclear about SPY. What are you unclear about, James? Where do you see Tesla? I think Tesla is a case where we are likely going to see a little bit more downside if we lose the 190. If we lose, where did I say? If we lose the 195.89 level and we close below it, we're likely going to go at least 10 points below. And we're likely going to fill this imbalance here at around 186. But I'm a buyer on Tesla below 200. Right? This long term is still a bullish market structure. This right here, long term, right? You can make the case that it did break a long-term downtrend if you're looking at the weekly, right? But you do have a bunch of imbalances here. But I do see if we break below 195.89 and we close below that, I do see quite a bit of downside for Tesla in the 175 to 180 range. But I don't care. I'm an investor. So, you know, I will just continue to buy it. Like, it doesn't take, I wish people understand that it doesn't take smarts to invest. Investing is one of the easiest things you could do. It's so easy to invest, right? All you have to do is buy during corrections. The stock market is up 75% of the time going back to 1900, okay? 75% of the time, the stock market is up. It doesn't take a genius to invest in the stock market. It's actually super easy. What it takes is courage. So most people are very scared to buy Tesla at 200. But when Tesla is 275, most people are okay to buy it. Go figure. That is the conundrum or the phenomenon of the human mind, right? Same thing with Bitcoin. Most people are scared to buy Bitcoin at 15,000. It hits 30, all the buyers come in, right? It's human nature. So same thing with Tesla. Like I'm more than happy buying it here. I don't care. Don't let anybody tell you you're a dummy for buying something at a discount when those same people are going to buy Tesla at 275. For sure they will. So don't let anybody talk you out of investing at the lows. So fucking what? This is when you're supposed to invest, when it's red. What do you think of AMD? Give me more of a question, Priyanka, other than thoughts. Where do you see Google technically? I do think Google has more downside. I love Google here, by the way. I love Google here. It just has a major imbalance to fill, right? This candle, like if you pull up the 4-hour, you'll see it more clearly, right? You have this here, you have the support, resistance, flip level here, right? It can continue to rally. I do like it here. Like I would buy it at this level, and then if it drops some more, I'll buy some more. For sure, I think that the drop was way overstated. Like it dropped 12% in the span of a week because it barely missed its cloud numbers, and cloud only makes up 11% of the revenue, right? So Tesla is not the stock market. Yeah, of course, dude. Do what you like, bro. Do what you like. All right? Do what you like. Tesla is not the stock market. No, but Tesla is a company that I like. If you don't like it, more power to you, bro. More power to you. Keep buying, the SPY at 460. Keep buying Tesla at 300. Keep buying Nvidia at 450. Is it smart to be buying market ETFs when the Fed is selling assets? It's too general a question, Mike. Investing has nothing to do with what the Fed is doing in the short term. Investing, all it takes is you being able to, spot a chart in a very basic sense and be like, this is at a discount. I'm going to buy. That's all investing is. You're not trying to time the bottom. If you want to time the bottom, learn how to trade. What are your thoughts on Palantir as a long-term investment? Not my type of stock. I don't care for Palantir. It will you know, it very well could go to 20, 30, whatever. It's just not my type of stock. Like I'm not a stock picker, okay? Like I said, I'm a trader. I do have my investing account is way bigger than my trading account, but I like to devote all of my mental resources to trading because trading is the hardest way to make money that I've ever seen, but also the most rewarding because you could just click buttons and make money appear out of nowhere, okay? So I keep my investing super, super simple. I invest in the indices and then a couple of blue chips when they're discounted. So I like Apple. I like Tesla. Apple is my biggest holding. Been investing in Apple since 2008, okay? I don't like to do stock picking. And by the way, this is just my opinion. It's just my opinion. But I've seen a video on YouTube that you're bullish on Palantir. I'm sure you haven't. I'm sure you haven't. If I'm bullish on something's stock price, anyway, I don't want to sidetrack. Okay, being bullish on a stock for the long term is different than being bullish for the day. Is different than being bullish for the week. Is different than being bullish for a vertical debit spread. Is different from being bullish when you're selling cash secured puts. If you're just asking me about an investment, Palantir is not my type of company. One, I don't like at all from a moral standpoint. I don't like to invest in companies that spy on Americans, okay? And Palantir spies on Americans. So not my type of company, right? Number two, I don't think it's as great as people make it out to be. I think there's so much content on Palantir because it generates clicks. People don't even know what they do. If you ask the average online Palantir investor, describe to me in one sentence what Palantir does, they wouldn't be able to do it, okay? So if your business model is not clear, I don't like to invest in it either. And third, I'm not a stock picker. I like to invest in blue chips. I don't like to bet that a company is going to be the next thing. If it's already established, then I like to buy it, right? What's going on in the chat? Why is Nick Roy, who's Nick Roy laughing at? Chris F. Palantir is overhyped? Yeah, for sure it's overhyped. Would you ever teach a course on how to become an influencer in the trading space? I don't know if I'm even an influencer, dude. I just turn on the camera and talk about investing. All right, Powell in 1 minute. What about Duolingo? I don't know what you're asking, bro. What do you think about Lucid? I mean, no, I think Lucid's gonna go bankrupt. How did you get so freaking smart? I'm not, bro. I'm out of all the people that actually talk about finance online, I actually have a finance degree. So if it sounds like I know what I'm talking about, probably because of that. Yada, yada, yada. Focus on the Fed. Playlist paradise. You know where the exit is, bro. You don't have to listen to me. Go, as a matter of fact, go start your own channel, bro. Palantir sells pizza. All right, let's see what happens.
Thank you. Here comes the chair.
Good afternoon, everyone. Welcome. My colleagues and I remain squarely focused on our dual mandate to promote maximum employment and stable prices for the American people. We understand the hardship that high inflation is causing, and we remain strongly committed to bringing inflation back down to our 2% goal. Price stability is the responsibility of the Federal Reserve. Without price stability, the economy does not work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. Since early last year, the FOMC has significantly tightened the stance of monetary policy. We have raised our policy interest rate by 5.25 percentage points and have continued to reduce our securities holdings at a brisk pace. The stance of policy is restrictive, meaning that tight policy is putting downward pressure on economic activity and inflation, and the full effects of our tightening have yet to be felt. Today, we decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. Given how far we have come, along with the uncertainties and risks we face, the committee is proceeding carefully. We will make decisions about the extent of additional policy firming and how long policy will remain restrictive based on the totality of the incoming data, the evolving outlook, and the balance of risks. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has been expanding at a strong pace and well above earlier expectations. In the third quarter, real GDP is estimated to have risen an outsized annual rate of 4.9%, boosted by a surge in consumer spending. After picking up somewhat over the summer, activity in the housing sector has flattened out and remains well below levels of a year ago, largely reflecting higher mortgage rates. Higher interest rates also appear to be weighing on business fixed investment. The labor market remains tight, but supply and demand conditions continue to come into better balance. Over the past 3 months, payroll job gains averaged 266,000 jobs per month, a strong pace that is nevertheless below that seen earlier in the year. The unemployment rate remains low at 3.8%. Strong job creation has been accompanied by an increase in the supply of workers. The labor force participation rate has moved up since late last year, particularly for individuals aged 25 to 54 years, and immigration has rebounded to pre-pandemic levels. Nominal wage growth has shown some signs of easing, and job vacancies have declined so far this year. Although the jobs to workers gap has narrowed, labor demand still exceeds the supply of available workers. Inflation remains well above our longer-run goal of 2%. Total PCE prices rose 3.4% over the 12 months ending in September. Excluding the volatile food and energy categories, core PCE prices rose 3.7%. Inflation has moderated since the middle of last year, and readings over the summer were quite favorable. But a few months of good data are only the beginning of what it will take to build confidence that inflation is moving down sustainably toward our goal. The process of getting inflation sustainably down to 2% has a long way to go. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that high inflation poses to both sides of our mandate, and we are strongly committed to returning inflation to our 2% objective. As I noted earlier, since early last year, we have raised our policy rate by 5.25 percentage points, and we have decreased our securities holdings by more than $1 trillion. Our restrictive stance of monetary policy is putting downward pressure on economic activity and inflation. The committee decided at today's meeting to maintain the target range for the federal funds rate at 5.25 to 5.5%, and to continue the process of significantly reducing our securities holdings. We are committed to achieving a stance of monetary policy that is sufficiently restrictive to bring inflation sustainably down to 2% over time, and to keeping policy restrictive until we are confident that inflation is on a path to that objective. We are attentive to recent data showing the resilience of economic growth and demand for labor. Evidence of growth persistently above potential, or that tightness in the labor market is no longer easing, could put further progress on inflation at risk and could warrant further tightening of monetary policy. Financial conditions have tightened significantly in recent months, driven by higher, longer-term bond yields, among other factors. Because persistent changes in financial conditions can have implications for the path of monetary policy, we monitor financial developments closely. In light of the uncertainties and risks and how far we have come, the committee is proceeding carefully. We will continue to make our decisions meeting by meeting based on the totality of the incoming data and their implications for the outlook and for economic activity and inflation, as well as the balance of risks. In determining the extent of additional policy firming that may be appropriate to return inflation to 2% over time, the committee will take into account the cumulative tightening of monetary policy, the lags with which monetary policy affects economic activity and inflation, and economic and financial developments. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Reducing inflation is likely to require a period of below potential growth and some softening of labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Howard Schneider with Reuters. Thank you, Chair Powell, for doing this. To what you referenced the rise in long-term bond yields, to what degree did that supplant action by the Fed at this meeting?
Thanks for your question. So I'll talk about bond yields, but I want to take a second and just sort of set the broader context in which we're looking at that. So if you look at the situation, let's look at the economy first. Inflation has been coming down, but it's still running well above our 2% target. The labor market has been rebalancing, but it's still very tight by many measures. GDP growth has been strong, although many forecasters are forecasting, and they have been forecasting, that it will slow. As for the committee, we are committed to achieving a stance of monetary policy that is sufficiently restrictive to bring inflation down to 2% over time. And we're not confident yet that we have achieved such a stance. So that is the broader context into which the strong economy and all the things I said, that's the context in which we're looking at this question of rates. So obviously we're monitoring, we're attentive to the increase in longer term yields, and which have contributed to a tightening of broader financial conditions since the summer. As I mentioned, persistent changes in broader financial conditions can have implications for the path of monetary policy. In this case, the tighter financial conditions we're seeing from higher long-term rates, but also from other sources like the stronger dollar and lower equity prices, could matter for future rate decisions as long as two conditions are satisfied. The first is that the tighter conditions would need to be persistent, and that is something that remains to be seen. But that's critical. If things are fluctuating back and forth, that's not what we're looking for. With financial conditions, we're looking for persistent changes that are material. The second thing is that the longer-term rates that have moved up, they can't simply be a reflection of expected policy moves from us. That we would then, that if we didn't follow through on them, then the rates would come back down. So, and I would say on that, it does not appear that an expectation of higher near-term policy rates is causing the increase in longer-term rates. So, in the meantime, though, perhaps the most important thing is that these higher Treasury yields are showing through to higher borrowing costs for households and businesses, and those higher costs are going to weigh on economic activity to the extent this tightening persists. And the mind's eye goes to the 8%, near 8% mortgage rate, which could have pretty significant effect on housing. So that's how I would answer your question.
Just as a quick follow-on to be clear on this, in your opening statement and just now, you seem to imply that you are not yet confident that financial conditions are restrictive enough to finish the fight. Is that true?
Yes, that's exactly right. To say it a different way, we haven't made any decisions about future meetings. We have not made a determination, and I will say that we're not confident at this time that we've reached such a stance. We're not confident that we haven't, but we're not confident that we have. And that is the way we're going to be going into these future meetings, is to be, just determining the extent of any additional further policy tightening that may be appropriate to return inflation to 2% over time.
Hi, Chair Powell. Thank you so much for taking our questions. I wonder, if you don't raise interest rates in December. Would the presumption be that at that point that we should expect that rates are at their peak, or is there a possibility of restarting rate increases next year? And are there any costs to taking a more extended pause?
So let me start by saying we haven't made a decision about September. You're asking a hypothetical there, but we're going into this December meeting. We'll get, as you know, 2 more inflation readings, 2 more labor market readings, some data on economic activity, and so we'll be taking, and also the broader situation, the broader financial conditions situation, and the broader world situation. We'll be looking at all those things as we make a decision in December. We haven't made that decision. I would say, though, that the idea that the idea that you would be difficult to raise again after stopping for a meeting or two is just not right. I mean, the committee will always do what it thinks is appropriate at the time. And again, we haven't made any decisions at all about December. We didn't talk about making a decision in December today. Really, it was a decision for this meeting and understanding broader things.
Nick Timmeros of the Wall Street Journal. Chair Powell, did the Fed staff put a recession back into the baseline forecast in the materials for today's meeting? And how much does this tightening in financial conditions substitute for rate hikes if the tightening is persistent? You had said it was worth maybe a quarter point when we had the bank failures in the spring. What is it here on something that's presumably more straightforward and more familiar to simulate?
So I guess I don't want to answer your question about the recession, but the answer is no. I think I have to answer it since we did publicly say in the minutes. You'll know anyway in the minutes. The staff did not put a recession back in. I mean, it would be hard to see how you would do that if you look at the activity we've seen recently, which is not really indicative of a recession in the near term. In terms of how to think about translation into rate hikes, I think it's just too early to be doing that. And the main reason is we just don't know how persistent this will be. You can see how volatile it is. Different kinds of news will affect the level of rates. I think any kind of an estimate that was, precise would hang out there and have a great chance of looking wrong very quickly. So I think what we can say is that financial conditions have clearly tightened, and you can see that in the rates that consumers and households and businesses are paying now. And over time, that will have an effect. We just don't know how persistent it's going to be, and it's tough to try to translate that in a way that I'd be comfortable communicating into how many rate hikes that is.
If I could follow up, I guess what makes you confident that tighter financial conditions will slow above trend growth when 500 basis points of rate hikes, QT, and a minor banking crisis have not thus far?
Well, that's the way our policy works is, and sometimes it works with lags, of course, which can be long and variable. But ultimately, if you raise raise interest rates, you do see those effects, and you see those effects in the economy now. You see what's happening in the housing market. You're seeing that now. You'll see if you look at surveys of people, it's not a good time, they think, to buy durable goods of various kinds because rates are so high now. I mentioned again, we're getting reports from housing that the effects of this could be quite significant. But you're right. This has been a resilient economy, and it's, I think, been surprising in its resilience. And there are a number of possible reasons why that may be. Our job is to achieve maximum employment and price stability, and so we take the economy as it comes. It has been resilient, so we take it as it is.
Thank you. Colby Smith with the Financial Times. In terms of the thresholds that you've laid out of what could warrant further tightening, the additional evidence of persistently above trend growth or some kind of reversal in the recent easing of labor market tightness, that seems to suggest something more powerful than just one more quarter point rate hike would be necessary. And I'm just curious if that's how the committee sees it.
So we've identified those factors. Those are not meant to be the only factors or a specific test that we're going to be applying with some metrics behind it. Really, we're going to be looking at the broader picture and what's happening with our progress toward the 2% inflation goal. Is the labor market continuing to broadly cool off and achieve a better balance? We'll be looking at that. Growth, we look at growth insofar as it has implications for our 2 mandate goals. We look at that. and we look at broader financial conditions. So we'll be looking at all of those things as we reach a judgment, whether we need to further tighten policy. And if we do reach that judgment, then we will further tighten policy.
And just in terms of the tightening of financial conditions, if that is having some kind of offsetting effect in terms of the need to potentially, again, raise rates, what then is the potential impact on the trajectory of rate cuts? Could we see those maybe pulled forward or have to see more than what the September SEP indicated?
So the fact is the committee is not thinking about rate cuts right now at all. We're not talking about rate cuts. We're still very focused on the first question, which is, have we achieved a stance of monetary policy that's sufficiently restrictive to bring inflation down to 2% over time, sustainably? That is the question we're focusing on. The next question, as you know, will be, for how long will we remain restrictive? Will policy remain restrictive? And what we said there is that we'll keep policy restrictive until we're confident that inflation is on a sustainable path down to 2%. That'll be the next question. But honestly, right now, we're really tightly focused on the first question. The question of rates cuts just doesn't come up because I think it's so important to get that first question, as close to right as you can.
Steve Leisman, CNBC. Mr. Chairman, I guess I had assumed that there was a tightening bias in the committee. You say in the statement you're looking to assess the appropriate stance of monetary policy, the extent to which you may need to hike additionally. You didn't say earlier that you were sufficiently restrictive. There were forecasts for 2 rate hikes among most members of the committee. But then you just said that, we haven't made a determination.
I like this guy's questions.
Is neutral, that there is no disposition to hike again, and that the committee largely has moved off of this forecast for 2 hikes? Or for, one additional hike?
I think you're talking about one additional.
Yeah,
I wouldn't say that at all. I would say, the language, looking at it here, in determining the extent of additional policy firming that may be appropriate to return inflation 2% over time. That's the question we're asking.
So is it right to think of that as a hiking bias is still in the committee here?
We haven't used that term, but it's fair to say that's the question we're asking is, should we hike more? It's not, and that is the question. And you're right that in September we wrote down 1 additional rate hike, but, and we'll write down another forecast, as you know, in December.
Thank you. Chris Rugaber at Associated Press. Since the last meeting, the auto workers' strike has finished. Oil prices have leveled off. And yet, on the other hand, you have the outbreak of war between Israel and Hamas. How do you see all those factors taken together affecting the economy going forward? How are you thinking about those?
So there are significant issues out there. As you point out, global geopolitical tensions are certain.
Wow, look at oil. Oil tanked. Oil tanked. Crazy.
Monitor those things for their economic implications. So the UAW strike, as you point out, appears to be coming to an end. Oil prices have flattened out. They haven't gone down, but I guess they've gone down a little bit from their earlier peak. Another one is the possibility of government shutdown. We don't know about that one. So there's plenty of risk out there. But I would go back to the bigger picture from our standpoint is we've got a very strong economy, strong labor market, making progress on the labor market, making progress on inflation, and we're very focused on getting confident that we have achieved a stance of monetary policy that is sufficiently restrictive. That's really our focus.
Great. And just one quick thing. You last month had gone to York, Pennsylvania, where you talked to last month, where you talked to a lot of small business owners. Just curious, what sentiments did you hear from them, or what did you picked up on, and was there anything that surprised you the most in terms of what they talked about?
I wouldn't say I was terribly surprised. I was very impressed by York as a town with a real strategy, and I would say it's very impressive what the people there have put together in the face of some difficult longer run trends about offshoring of manufacturing and that kind of thing. They've done a great job as a city, I think. What you hear, and is consistent there, which is people are really suffering under high inflation. You were there. We talked to some people who were feeling that in their businesses and other people who were feeling it in their home lives as well.
All right. I think we've heard quite a bit. So I think what's important is that, he's saying labor market remains tight, and he's right, because we had jobless claims come out this morning, and jobless claims actually job openings come out this morning, and job openings were higher than expected. He also seems to signal that there probably aren't going to be more rate hikes, which is crazy. He's never said that before. I have to go back and I'll do an analysis post this to see exactly what his words are. But, we haven't seen him say that, basically that there probably won't be any more rate hikes. I'm curious to see if the bets for December 13th have changed. Yeah, so it's slightly higher now. It was 68% yesterday that we'd stay put. Now it's 77%. So a 9% increase in bets that the Fed is not going to raise on December 13th, right? And I'm probably in that camp as well. This will likely can lead to, if we can get above this fair value gap, this can lead to a rally, right? A rally. And I wanted to share something else with you. What did I want to share with you? This is crazy what I'm going to share with you here regarding November. Hopefully this loads so that I can share it with you. Okay. No, not this. I had it on my Twitter. I wanted to show you what it looks like when we've had a red October. Do you guys remember those Yeezy red Octobers? When we've had a red October, where is this chart here? This is a crazy, crazy chart. My God, why can't I find it? Might be in my bookmarks. Hang on, you guys definitely want to see this. Okay, right here. When October to November, when the trailing week of the October to November turn, meaning when it's the week that we go from October to November, this week, when the previous week has been negative, right? And you see all the times, 19 times this has happened, including 2023. Look at after November 2nd, what happens. Every single time has been green, except for twice, 1975 and 1983. We were at exactly zero. Every single other time has been green. So the Fed, I think, is likely providing, obviously they could have cut today, but there's no way that they would cut. Likely providing some runway for an end of the year rally, right? In my view, I will not be comfortable with that assessment until we get above this, right? I don't know why you're laughing, Dean Anthony, as someone saying fair value gap. I mean, fair value gaps are just as good as any other strategy. And for those of you that didn't catch it, we basically shorted the top and closed near the bottom. If you look at this here, I was doing this, while Powell was talking. Here's my entry. This is my entry up here, right? And my exit was here. We did drop a little bit more, so didn't catch the exact bottom, but that's fine. Made 530 in, I don't know, what seemed like 3 seconds. It was crazy. And then obviously we have the SPY call spread and then the pre-FOMC NASDAQ short. So 3 for 3 on trades today. It's been an awesome day. How long have you been an ICT student? I'm not an ICT student, and do not come to me for pure ICT theory, because I like to incorporate some of his stuff. I do think that if you look at fair value gaps, they are extremely accurate, but I'm not a strict ICT trader, right? Do you have a day trading room? Yes, the link is in the description. All right. Let's see. What are we at in terms of likes? I want to give away a hat. Oh my God, we're 230 away. Guys, if we get to 1,000 likes, I'll pick somebody at random and I'll give away a hat. and I'll pick someone else at random and give away a hoodie. So make sure you get this to 1,000 likes. I'm from Brazil and I love Canada and trade. Delano Maritz. Awesome. Is it too late to add for the long term? Yes, Julio, it's too late. It's all done. You missed the boat. The stock market is gone forever, bro. Too late. You're done. We'll never, ever get this opportunity back here. I mean, what are you talking about, bro? Of course it's not too late. Do you have to pay for shipping? No, I'll pay for it. Jesus, cheap ass. No, I'll pay for it. You're balding at 23. Are you on like peptides or TRT or any of that kind of stuff? All right. But I do think, that these are levels to add. One thing that I like to do is take 50% of the previous rally, right? And if we are at a 50% mark of the previous rally, I always buy, right? I don't even question it. I just buy it. If it's a blue chip, no, we're not talking about fucking SoFi and Shopify here, right? I'm talking about the SPY, QQQ. No trades. I did have a trade. I had 3 trades. I had a trade pre-FOMC that one of our analysts, Justin, sent out. I had a trade this morning, which was a credit call spread. And then I typed in the chat that I was shorting ES, and it took 2 seconds. Here. We took out the lunchtime lows. Right here. And there isn't a retracement for a long. So now what you have to wait for is you got to wait for these highs to get taken out, or else there's no trade. You're not going to trade this from the middle. Lucid is a red chip stock. Yeah, Lucid sucks. The 10-year, there's going to be a trade. Okay, here's what I want to do. I really want to short ZN here. Any thoughts on solar stocks? I personally only invest in quality. So I'm probably not the best person to satisfy your penny stock urges or shit stock urges or to stock pick. Like for me, it's not like that. There are many other channels that you can go to and potentially lose a lot of money on, right? Whether it's Tattooed Chef or Beyond Meat or, I don't know, Neo or something, right? I traded all those things, 2020, 2021, yes. But for me, in terms of an investment, it's very hard for me to invest in those stocks, including solar stocks. It's not my type of investment. And I'm being honest with you. And I'm not the end all be all. This is just my opinion. Okay? I'm just one man. This is just my opinion. Would you consider Diz as one of the blue chip stocks? In general, yes, not right now. You're so mean, you must be from NY. I'm not mean. I'm just honest. I like to be honest because, look, honesty is the only way that you can get people to change bad habits that others have maybe ingrained in them, right? The space is filled with so much garbage. The space is filled with so much garbage, guys. So it's like I've seen the worst habits, the worst investing strategies bestowed on people that have no idea whether those things are right or wrong. You know what I mean? So honesty is really the only way for me to make sure that you're able to point this to identify that stuff for your own, right? I'm not going to sugarcoat anything for you. This is why you'll always hear me say trading is hard. Trading is not easy. Other people will try to tell you trading is easy because they want to sell you as fast as possible in whatever they have. You know, yes, we have a community. Yes, obviously trading is also a business for me, but I'm also not dishonest. So I'm going to tell you that trading is one of the hardest ways to make money. And I want people to know that because I want them to know what they're getting into coming in the door, right? I don't want you to have this perception that trading is easy. Then you lose all your money and then you're like, wait a minute, you said trading was easy. No, trading is hard. Trading is hard. Now, I think investing is easy. And investing, all it takes is courage and time. That's it, right? It doesn't take a genius to be like, what should I invest in? Maybe the S&P 500 because it's up 75% of the time since 1900. You know what I mean? That doesn't take smarts. That doesn't take effort. All it takes is courage and time. That's it. Buy when it's in a correction, buy when it's in a bear market, and hold it, and you're good. Make sure that you have DRIP enabled, which is dividend reinvestment. Make sure that your broker has DRIP re-enabled so that any dividends you get from SPY or VOO or, XLE or whatever, make sure that those dividends that you're getting is just being reinvested and you're compounding. That's all it takes. That's all it takes. Did they pause? They skipped. Yes. I love you guys too. And so no, I'm not being mean to anybody. I love everyone, especially those of you that support the channel and just watch and spend your time. But I have to be honest with you, right? Who do you think is the greatest trader of all time? ICT? I can't say ICT. No, I think his strategies are some of the best that I've ever seen compiled. But no, I can't call him the greatest trader because he doesn't show his real money trades. And what he shows are paper trades, and that's fine, right? I'm not knocking him because he does do a lot of he does bestow a lot of great education on people, and you see a lot of his students are profitable. But I mean, can I put him up there with the likes of people that actually have a proven track record, like Larry Williams, like Warren Buffett, like Jesse Livermore? No. Like Mark Douglas? No. I mean, those guys are legends. They're legends in the game. Like to me, nobody beats Buffett. Nobody, right? The fact that you can be a billionaire just from investing, nobody has done that. No one has come from $0 to billions just from investing. There's maybe, less than 3 people in the history of the world that has ever done that. Ever. And my God, that's harder than winning the lottery. Ray Dalio's up there too, of course. Ivan, I don't separate my portfolio like that. Guys, 137 more likes, and I will send out a hoodie and an apple. And an apple. I'll send out a hoodie and a hat. Sorry, what was I saying? Oh, Ivan, good question. He says, out of your whole net worth, what percentage you allocate for long-term stocks? Here's what I'm going to tell people, okay? And I hope you guys listen to this. There's a few things I'm going to say here, okay? And if you're interested in being profitable, I hope you listen to this. Separate your investing and your trading, okay? Have them in separate accounts. I've done this over the years where I've had them in the same account, and I cannot tell you how much my investing has affected my day trading, right? So like if I buy Tesla, right? And my Tesla position is down and I'm down like, I don't know, $6,500 on that position. And I'm trying to day trade and I see that 6,500 position down, which is my long-term hold, right? and I'm trying to day trade and say I take a couple losses day trading. Now I'm looking at the whole account. I'm like, fuck, I'm down 1,200 day trading. I'm down 6,500 on my long-term holds. My whole day is shit. I can't keep staring at these losses. I'm going to start liquidating everything, right? This is what you get into when you have your long-term holds and your day trading in the same account. Split them up. In TD Ameritrade, you can have 1,000 accounts under the same main account, okay? Split them up. Do not look at your long-term account when you're day trading. Don't look at it. All you have to do in your long-term account is this, okay? Corrections, buy, store it away. Make sure drip is enabled. Bear markets, buy, store it away, right? Or even if you don't even want to look at corrections, bear markets, and you just want to dollar cost average and set it, say every month I'm buying 500, storing it away. Do that, okay? Your day trading account, keep it separate, okay? And do not, like, your best tool until you become a full-time trader, your best tool is going to be your job. So I never advocate people saying, I'm going to take 5,000 and my hope is to turn this into 100K. You have to continuously be ready to add to your accounts, whether the day trading account or the long-term account. The way you add to the accounts is by having an income. Because if you have this small amount of money, say 5,000, and it starts to dwindle away, and now your 5,000 is 2,100, you're going to make some really dumb decisions if all you did was try to protect this small amount of money and you're now trying to make good decisions while seeing that balance dwindle. It's so important for the mind while you're learning how to day trade. It's so important to take that say you have a $5,000 day trading account, it dwindles to 2,100, replenish it while you're learning, okay? Replenish it back to $5,000 so that you're not looking at it. And the losses that you take have to be looked at as you paying for classes, okay? When you're trying to learn how to day trade, the losses that you take, you have to look at this as you are paying for education. As long as you are serious about learning and you're tracking your trades, you're back testing, you're looking at your win rate, you're looking at your R multiple, right? As long as you're doing that and not just gambling every day, you have to look at it as paying for classes, okay? And it's so important to not let any negativity enter your mind as much as possible. So what I do is I replenish, or what I did is I would replenish that account, right? Because I've tried doing that. We're trading with a small amount of money. I see that dwindle away. Now I'm like, fuck, 5,000 has turned into 2,100. Now I have to do something crazy to get it back to 5,000. So I'm going to go all in on SPY puts at 2,100. I lose that entire amount. Now I've blown up an account. As opposed to replenishing that amount, saying, okay, that was a learning process. Let me write down what I did wrong. Let me write down what I did right. Now I'm going to replenish this account back to 5,000, and I'm going to continue to day trade. If you can break even your first year, you've won. You've won if you can break even your first year day trading. Okay? I hope that makes sense. I hope that makes sense. SPY ripping to the upside. Yeah, man. I said, people laughed at me when I said, careful if you're shorting here. And again, obviously, like, this could be a short the rip situation, and I'm not going to be comfortable until we close above this imbalance, but I'm just saying that. Don't sell calls against your long-term portfolio. No, bro. I'm talking about day trading. Selling calls is a hedge. Selling calls is a hedge, right? I'm talking about day trading, specifically day trading. No one's laughing at you, bro? Well, you should see my last video when I said I would be careful shorting at this level, right? They saw these 2 days and like, oh my God, what an idiot. You said don't short. I'm like, no, dude. I said be careful if you're shorting here because we are at a very pivotal level, as you could see by this V-shaped reaction. 99 more likes, guys. I'm about to leave in 20 minutes. So 99 more likes. Did you operate gaps too? Not sure what you mean. You believe in the chip sector as one of the future player or it can die? Those things are not mutually exclusive. Yes, I believe in the chip sector, and yes, it can die. There's no contradiction there. I believe in the chip sector for the long term, of course, and also it can die. Yes. Mike Cox, my biggest breakthrough in trading came when I wasn't stressed about losing the money and could be patient. Exactly. Exactly. Have you ever considered starting a prop firm? Funny enough, I did. But I'm considering starting a hedge fund before a prop firm. I'm not, a prop firm would just be easy money. Right? And I wouldn't be providing a service to anybody. I would just be enabling people to gamble. That's all a prop firm does. But yeah, I think I'm gonna open a. Apple earnings are tomorrow, right? Okay, I might have to close our SPY cash secure puts here. Woo! Tesla absolutely ripping. What a day, man. What an awesome day. What an awesome day. Thank God. I might have to close these cash secure puts here. I'm up in full transparency. I'm up 3,600 on the day. In full transparency. $36.14 actually. Here. What an awesome day. I have SPY cash secure puts. Do I close these? Do I close these? Do I close these? I have SPY cash secure puts here. But they expire in December, and I'm up 50% already. I'm up 52% on SPY cash secure puts. It's the 400 put on SPY. I'm just going to hold this, actually. No, I'm going to close this. And I'm looking for a potential short on NVIDIA here. Let me just alert the team real quick. David Dahl says I'm up 1,400. Amazing. Rebbe Said says, mashallah. Thank you, bro. Up 91K on the day? Shut up, John Steven. Amazing. What's the expiration date on your SPY? I closed most of them. It was today. All right. Have you seen that guy that had 300 puts on the SPY? Yeah, I saw him on Twitter. That's who you're talking about? I'm 21K up, Niraj. Wow, awesome. All right, I'm looking to take Nvidia call spreads. What's your play on Nvidia? I'm gonna send it out in the academy. Up 750. Bali, amazing, bro. That's amazing. I think we get one more push up. Let me see. 425. Ooh, this will be sick. Would you ever join Robin's Cup? Maybe. It just takes a long time. It's not like one day, right? You're disappointed in Tesla? Why? This might be the bottom for Tesla. Why would you be disappointed? It actually turned positive today. I bought some more Tesla today for my my nephew's custodial account. I really enjoy your channel, your honesty, insight, humor. I appreciate you, Rob Williams. Thank you so much, man. I'm going to give you guys where I think the market is going to go. So I'll give you a technical analysis overview. You guys know I've been eyeing this level for the longest time. The easiest way to spot this was the volume imbalance, right? So we had a volume, sorry, not volume imbalance. The VPVR, right? The point of control was right here, this yellow line. This shows us that most of the SPY volume was right here, right? At around 410. This is why I was eyeing this level. And this is a level, if you guys have been watching my videos, this level right here is where I wanted to buy the SPY. Awesome. Sold the cash secure put, about to add and added to my SPY position, about to add more. We could get a rejection here. We're not safe until we close above, really, if we're being honest, until we close above this order block here. If we close above this, then it's off to the races for a Santa rally. I do think we'll be green tomorrow, so I'm going to hold off on NVIDIA, and I will open it tomorrow. But I do think we will be green tomorrow. I could be wrong. It's one day, but I'm basing this off of the analysis that I showed you right here, right? Out of the last 19 years, only once were we negative on the second day of November. So I'm basing it off of that. And if that's the case, then I will likely sell call spreads on NVIDIA tomorrow. Not going to take any more SPY hedges. I'm done for the day on taking SPY hedges. Now I'm just looking to build positions. If we reject off of this order block, then I think, 405 is a very 404, 405 is a very doable spot, which would be exactly at the 50% retracement of this entire rally. And I will look to add more there. If we do break above this, I think we'll get a Santa rally, and it could be violent. It could be violent. There are a lot of shorts. There are barely any buyers here. So yeah, can you be my uncle? Can you open Roth IRA account in TD? Yes, you can. Can you trade futures with that account? You can trade options. I'm not sure about futures. Why that OB? Because it's right here. Because it's right here, and that order block left a lot of imbalances down here. So it is a valid order block. Hat time? Nope, we didn't get to 1,000, bro. You guys have 54 more, and I'm about to leave in 9 minutes. So you guys better bump that likes up to 1,000, or else if I leave and there's not 1,000 people, not 1,000 likes, then we'll have to do it next time. So All right. November 6th, TD's moving to Schwab. That's not really a big deal. It's just transferring from one crook to the next. And also this order block, for those of you that were asking, if you look at this order block and you just drag it out to the left, you could see that, you know, even if you're just talking about supply demand levels, you could see that this is a huge supply level, right? Used to be demand turn supply, or used to be support, now resistance. So we have to get above this, right? We have to get above this. Answer my question for a like? Nah, bro. Post your question. If it's valid, I'll answer it. But you're not going to make me sing and dance for you. If you want to leave a like, and I appreciate it. If you don't, then don't. It's your hat and your hoodie. If I win the hat, I come pick it up at Burj Khalifa. I'm not in Dubai anymore, bro. One question, please. In what we have seen today, this was more hawkish or dovish? It's as expected. I think I would lean towards more bullish because he did mention that we are likely done with rate hikes. We do have Apple earnings tomorrow. What's up with Snowflake right now? I don't know. I don't follow that stock. Tesla calls for tomorrow. If you want, that's just a gamble. That's not how you trade. What's going on with solar stocks lately? They're all overvalued. I don't know. I'm not a solar stock buyer. All right. Let's see where we end the day as well. Okay, and then in terms of NASDAQ, same exact thing. Right? When did I send out I did send out an alert to buy QQQ. I'm going to send out a NVIDIA play in the Academy tomorrow, Devin, so look out for that. Not a put on NVIDIA. I'm doing a credit call spread. But I'm going to send it out in the Academy. So use the promo code if you want it. Join it. Join us. Use the promo code below if you want it. If you want that play. 1,000 likes. You guys did it. Shit. 5 minutes before I was supposed to leave. All right. Here's what you're going to do. Hold on. I gotta record this. I got to record this. Because this is going to be hilarious. 1 second. Here's how I'm going to pick it. One second. We're gonna do it like this. All right, I gotta record this. Okay, here's how we're gonna pick it. He said, "Throw a dart at the screen." You guys are all going to leave. Dawei Huang says, just don't get naked. You guys, bro, I love you guys. All right, here's what you're going to do. You're going to leave your... You're going to leave your favorite emoji. And Megatrix is definitely not winning. You're going to leave your favorite emoji, and I'm going to screenshot in randomly, okay? So do it right now. I'm going to take a screenshot of the chat, okay? Leave it. Okay, screenshot, done. So I'm going to send Amanda LaRue. Amanda LaRue gets the hat. All right. So Amanda LaRue, hit me up on Instagram. So follow my Instagram below. Hit me up on Instagram and tell me what your YouTube account is, and then we'll get that set up. So make sure that you hit me up on Instagram link in the description below, and I'll send you a hat. And then that's for Amanda LaRue. And then the next is for the hoodie. So I'm gonna take a screenshot now. Nadeem Mahmoud, I'm gonna send you a hoodie. All right. So Amanda LaRue and Nadeem, hit me up on Instagram, DM me, and we'll get that sorted. Nadeem, I'm gonna send you the hoodie. Amanda, I'm gonna send you the hat. But appreciate you. Oh my God, that comment killed me. He said, just don't get naked. Y'all are crazy, man. Y'all are crazy. All right, and I'll catch the rest of you guys on Discord. But this was fun as always. If you guys want me to go live more often, let me know. We'll do maybe another live for Apple earnings. I don't know. But yeah. I'll catch you guys some of you guys on the Discord. For the rest of you, I'll catch you on the next live. But appreciate you guys watching. And thank you guys so much. Stay safe out there, traders. Peace.